Good afternoon, everyone. I'm Peter Lim from the School of Sciences and Engineering. Before we start, may I know if you can hear me well? Great. So, for us to begin, I'll read the rules of the event this afternoon. Please refer to your screen. Please work in an environment where background noises can be muffled at the very least. Please use the chat box if you have any concerns during the webinar. During the Q&A portion, please type your questions in the Q&A window. Be attentive and avoid distractions. If you're facing any technical difficulties with Zoom, please log out and log back in again. To get in touch with our speakers after the webinar or with CRC and CRC's consultants and experts, please email us through crc@uap.asia. To start our webinar, let me call on our host this afternoon, Mr. Remy De Leon from the Center for Research and Communication.
Hello there. Good afternoon, everyone. We're very glad to welcome you to today's online event, which focuses on the Philippine economy as a top emerging market, brought to you by the Center for Research and Communication and powered by the UA&P Department of Information Science and Technology. My name is Remy De Leon, and I'm the Communication Research at CRC, and I'm really quite excited to be your host for today. What I know is we're up for some good news, which is something to be quite now that we're ending 2020, it's December, and heading into 2021. Certainly looking forward to that. Now let's just check to see if our audio is okay. Please tell me in the chat if you can hear me correctly. All right, we've just been all clear. And we're good to go. As you may already realize, CRC holds events like this on a regular basis. If you want to see when the next CRC event is coming up, or if you're curious about past CRC events, or if you just want to find out more about CRC's research and consultancy work, just find us on social media using the links currently flashing on your screens. Now, if you don't want to type the whole thing, just search for the handle Center for Research and Communication, small caps, no spaces. I trust you'll find what you're looking for. If you want to get in touch with our speaker, Dr. Villegas, or any of CRC's experts and consultants, there are quite a few, do send us your emails at CRC through crc@uap.asia. That's CRC, the @ sign, then UAP dot, then ASIA. And one last note, at the end of our event, we'll also have a post-event survey. That's important because that's going to be the way we figure out how to give you your certificate of attendance, which quite a few of you have requested. There's a reason we call it a post-event survey after all, so it comes at the end of the event. Do watch out for that. All right. Without further ado, we're off to the core of our discussions for today. First, let me introduce you again to CRC, the work of CRC, and to our speaker for today, Dr. Bernardo M. Villegas.
The Philippines, an archipelagic Southeast Asian country situated in the Western Pacific, made up of about 7,641 islands, with a population of about 109 million people. It's one of the world's most important emerging markets, with the third highest nominal GDP in Southeast Asia. It's a market brimming with possibilities, with plenty of opportunities for savvy investors. But where do you begin when it comes to the Philippines? What are the long-term prospects for business? What are the opportunities and challenges? Where do you get your information? Since its founding in 1967, the Center for Research and Communication, or CRC, has grown to become one of the country's most important research and consultancy institutions, continuously providing innovative business advice through its diverse pool of experts across a tapestry of different business fields. Among the most important of these experts is Dr. Bernardo M. Villegas, CRC's Director of Research and one of the Philippines' most eminent economists. Dr. Villegas has been advising Philippine presidents on industrial policy formulation and investment promotion since the 1970s. His influence has been so great that when the Philippines created its new constitution in 1987, Dr. Villegas was immediately tapped to be a member of the Constitutional Convention. Here now to speak about the Philippine economy as a top emerging market, the Center for Research and Communication is proud to welcome Dr. Bernardo M. Villegas.
Greetings to potential and actual investors in the Philippines from the Indo-Pacific region. Since I'm assuming that investors who are looking at the Philippines are here for the long haul, the long term, my focus will be the Philippine economy as a top emerging market over the next 10 or more years. I say that because it is possible for investors, both domestic and international, to be too distracted by the short-term challenges, the temporary blips resulting from the pandemic. And indeed, if you take a look at the Philippines over the next 12 to 18 months, you will tend to get discouraged because we will not see the light at the end of the tunnel of the pandemic very soon. The most recent statistics showed that in the third quarter, the Philippines posted another decline of 11.5% after a decline of 16.9% in the second quarter. And there will continue to be declines in the coming quarters, even in the first quarter of 2001. So I'm not very optimistic about a quick recovery in the new year because I'm realistic enough to accept the possibility that as is happening in some of the most developed countries in Europe and in the US, there may be second or even third waves of the virus. And that may prompt our government, both at the national and especially at the local levels, to impose further lockdowns, which would mean, once again, the economy, especially consumption spending, declining. So I am not that optimistic over a 6 to 8 month period. But my main focus will be on how outside analysts, whether it be think tanks, financial institutions, credit rating agencies, see the Philippines over a longer term, let's say over a decade. And I am glad to report that the Philippines is cited as one of the most promising emerging markets to invest in if you take a long-term view. And let me stress that these are assessments being made independently. They are not self-serving propaganda of our government or even economists like me who are referred to as prophets of boom, overly optimistic. These are very objective views that I will cite in this briefing. Why do outsiders think highly of the Philippine economy over the long term? I can present a few strong fundamentals that I think they consider when they are bullish about us. Let me start with the first distinct advantage that we have. This is what I refer to as the geographic advantage of the Philippines, being at the epicenter of the region that will be the most dynamic in the world over at least the next 10 to 20 years. And let me explain. I'm sure many of you have heard about the last century being referred to as the American century. And indeed, the last century was one in which the US was supreme economically, as well as militarily and politically. Of course, with some challenges from time to time from Japan and from the EU, but there's no question that the US was on top of the global economy. To be more accurate, probably we can say that the last century was a three-cornered competition among the US, EU, and Japan. Now, if you take a look at the lower tables, just before the pandemic, these countries of the so-called American century were struggling just to grow at 0.8% for Japan to a high of 2.9% of the US. And there's no reason to believe that after the global economy recovers from the pandemic, that these territories can grow faster. They are already with very high per capita incomes, and especially for the Eurozone and Japan, they are burdened with a demographic problem. Very rapid aging and very low fertility rates, which dampen their economic prospects. Now take a look at the countries that are part of the so-called Asian century this century. China, India, and the ASEAN Economic Community. Before the pandemic, they were growing at anywhere from an average of 5.2% for the ASEAN 5. And let me just mention that the Philippines was above average. It was growing at more than 6%. And India was growing at 7.1% and China at 6.6%. There is all reason to believe that once the global economy recovers, these growth rates will once again be registered. And in fact, I'm sure you know that China today is the only important economy that is posting a positive growth rate. And you see the growth rates in the Asian century are 2 to 3 times those of the growth rates of the American century. And the Philippines, I repeat, is right in the middle of this region, which fortunately has not been inflicted with the inward-looking, anti-trade, anti-globalization mentality that you see in the US, America first, or in the UK, Brexit. We are in this region still very open to trade with one another. In fact, there has been this recent announcement about the Regional Comprehensive Economic Partnership, in which 5 more countries are joining the ASEAN Economic Community in efforts to promote better and more open trade. That is one of the reasons why the Philippines is rated highly by outside analysts. Let me just remind you of what more than 15 years ago, a Goldman Sachs economist by the name of Jim O'Neill coined the acronym BRIC, representing Brazil, Russia, India, and China. I'm sure you remember when BRIC was being touted as the leading emerging markets for many years to come. Unfortunately for Brazil and Russia, their leaders mismanaged part of the economies, and people are no longer as excited about these two huge markets. India and China continue to be very attractive. And now we add the ASEAN Economic Community. Just as an aside, more than 10 years ago when the BRIC leaders met in China, they felt a little guilty that there was no African country included in their club, so they added South Africa. As you can see from the figures, the dimensions of South Africa are very far from the other regions. The same economist, Jim O'Neill, also talked about the next 11 emerging engines of growth. And you will see among these 11, only 3 Southeast Asian countries. And the way to remember them is to think of the acronym VIP, not a very important person, but Vietnam, Indonesia, and the Philippines. Indeed, these are the 3 huge economies that will dominate the ASEAN economic community for years to come. They're very large markets. They're very rich in natural resources, especially Indonesia. And they have managed to build institutions that lead to economic stability. One of the most recent assessments of emerging markets was made by the prestigious Oxford Economics Group in November 2019, just before the pandemic. And if you take a look at the ranking, India ranks number 1, the Philippines is number 2, Indonesia is number 3, and China is number 4, and so on and so forth. China, despite the fact that, as I said, it's the only one posting a positive growth rate during the pandemic, is only 4th in the list of Oxford Economics, because in the next 10 years, it is going to be troubled by the aging of the population. Because of the one-child policy that it followed for a long time, which is trying to reverse now but without any success, China's growth is dampened by a demographic crisis. India is still growing. India will actually have a larger population, probably in 5 years, than China. And the Philippines is one of the few countries in this region that can boast of a young, growing, and in this particular case, English-speaking population. During the pandemic already, the prestigious economic publication, The Economist, came out with selected emerging economies ranked on 4 measures of financial strength. And as you can see, the Philippines was ranked number 6, besting Thailand, Saudi Arabia, China, Vietnam, Poland, Nigeria, and so on and so forth. Why do I think that The Economist thinks highly of the Philippines in terms of financial strength? The reason is we have one of the best central banking systems in this region, manned by very professional people, independent of politics. And we have a pool of very competent fiscal managers, now headed by Secretary Dominguez. And there are a lot more people like Secretary Villegas who can continue the discipline of our fiscal managers over the last 10 to 15 years, keeping our debt to GDP ratio at a very low level of 30 to 40. I'm sure you know that there are countries like the US, Japan, Italy, Spain, that have debt to GDP ratio of anywhere from 100 to 200%. So our ratio of 30 to 40% is remarkable. And that is a great advantage right now, because since it is to borrow a lot in order to stimulate the economy, we have tremendous leeway to borrow, and our credit standing is good. So we can even bring this ratio to 70% of GDP without leading to financial instability. And that definitely is a strength that outsiders see in us. Let me just cite one of the longest term projections made by Hong Kong Shanghai Bank almost 20 years ago. This was when we were still called by outsiders as the sick man of Asia. Let me stress that many of these positive assessments are being made despite the fact that the analysts are conscious of our many weaknesses: corruption, a very poor agricultural sector, inability even to manage the pandemic as efficiently as countries like Vietnam, South Korea, and so on and so forth. But they always see beyond these weaknesses because of the strengths that I have enumerated. And Hong Kong Shanghai Bank, when we were still the sick man of Asia, prognosticated that in 2050, the Philippines would be the 16th largest economy in the world, GDP-wise. And take a look at the countries that we are supposed to surpass: Indonesia, Australia, Argentina, Malaysia, Egypt, Thailand, etc. And one, again, of the most recent assessments already during the pandemic was done by the Japan Credit Rating Agency that upgraded our credit rating from triple B plus to A minus. And that is why today creditors are very willing to lend money to our government so that our government can really play a major role, not only addressing the problems of the pandemic, but of actually stimulating the economy back to recovery. And I'm sure you all know that the IMF is telling countries, be more aggressive in stimulating the economy. Don't worry about borrowing too much. Let me now summarize briefly what I already have referred to as our strong fundamentals. The first, demographic dividend, young, growing, and English-speaking population, which gives us a tremendous advantage, number one, in sending more than 10 million of our workers abroad as overseas Filipino workers, earning $33 billion of remittances that, when brought back to the Philippines to the relatives of these overseas workers, are the important source of consumption spending, which is the number one engine of growth of the Philippine economy. About 70% of our GDP is explained by consumption. And this young, growing, and English-speaking population also gives us a lot of competitive advantage in the business process outsourcing IT sector, together with India, where we are able to support multinational corporations all over the world in the business services that they need, cutting down significantly their costs. And this sector is going to bounce back very quickly once the developed world retains some normalcy after the pandemic. Then I already referred to the geographic dividend, our being right in the middle of this very dynamic Indo-Pacific region. Then let me refer to what I call temporal dividend. I'm referring to the fact that in the next 10 to 20 years, our economy will be traversing what the Engel law describes as a shift from very basic commodities that the population would consume to a variety of goods and services that are discretionary spending, meaning all types of industrial products and services that will be needed by this population of 110 million people who now will be upper middle class in category and no longer lower middle class. And that would lead to an explosion of demand for consumer goods and services in the domestic market. We don't even have to depend too much on export, in the same way that China and Indonesia are not that export dependent. Our businesses, as well as foreign investors, can just focus on selling to the domestic market to make a profit. We also continue to have abundant natural resources like Indonesia and Vietnam, agricultural, mineral, and in the Philippine case, in the area of tourism. Once foreign tourism recovers, let's say 2 to 3 years from now, we will be one of the top destinations for these foreign tourists. In the meanwhile, we are going to count on our domestic tourists. Before the pandemic, there were 60 million of us traveling outside of our home to the hundreds, if not thousands, of islands that have very attractive tourist destinations. Some of you might have noticed that a leading magazine on travel and tourism ranked our Palawan Island as the #1 resort island in the world today, besting Bali. And for your information, Palawan has 2,000 islands in its system. We have all these resources that can help us rebuild our tourism industry once the pandemic is licked, let's say 2 to 3 years from now. We are fortunate that the Duterte government has started this Build program. You know, we used to spend only about 2% of our GDP on infrastructures. Under this present government, that has been brought up to about 6 to 7%, and we are sure that the next administrations, at least the next two administrations, will continue this Build program. It's so obvious that we are way behind our neighbors, especially if you look at South Korea, Taiwan, China, and Japan, not to mention even just Vietnam. We have not really spent enough on infrastructures, and we need this Build program for a long time to come, which will be an engine of growth of the Philippine economy. I'm also happy to report that there are regions in the Philippines that are growing faster in the National Capital Region. So we are seeing now areas south of Manila called Calabar Zone, especially the province of Batangas, areas in Central Luzon, especially the so-called Pampanga Triangle, San Fernando, Angeles, Clark, and Subic, former US bases. These areas are the new megapolis urban centers that will replace Manila as a center of industrial development. In the Visayas, the most attractive city today is called Iloilo, that will replace to a certain extent the industrial center of Cebu, which is also overcrowded. And in Mindanao, the most promising city is the city from which our president comes, Davao. Very rich in all types of resources, agricultural, industrial, and so on and so forth. And Davao will definitely grow. Actually, it has been growing already faster than Manila for a number of years. Obviously, we have many challenges still to face. And the number one is our very low agricultural productivity. We really stick out like a sore thumb in Southeast Asia when we are compared to Thailand, to Malaysia, now even to Vietnam in the area of agricultural productivity. And this is because of decades of neglect. Our governments were not focusing on countryside development. They were so obsessed in the wrong kind of industrialization that they wasted resources that should have been spent on farm-to-market roads, irrigation systems, post-harvest facilities, all the resources that our small farmers needed to be productive. But we kept them in poverty because of this neglect. There are now signs that is changing. In fact, I'm happy to report that despite big declines in practically all sectors of the economy during the pandemic, the agriculture sector is the only one that posted a positive growth of 1.2%. That is a good sign. And I attribute that also to the fact that we have a very competent Secretary of Agriculture, very experienced, very knowledgeable, and that is now leading to his putting the necessary foundation for the long-term growth of agricultural productivity. We still have, unfortunately, too many obstacles to doing business. Red tape, bribery, especially at the local government levels, and we still have constitutional restrictions against foreign direct investors. In fact, we suffer from comparison in this regard with Vietnam, that is more open to foreign investors than we are. Some of us are trying hard to convince our government to remove those restrictions. It's also a paradox that despite the fact that we have many young people, there's a shortage of technical skills. This is a psycho-sociological problem where parents and young people look down on blue-collar skills, very much probably inherited from our US background where everyone wants to have a college diploma. We are now trying to convince more and more of our young people not to pursue a college degree, but to become good plumbers, electricians, carpenters, welders. That takes obviously a lot of marketing. And some of us are very much on top of that. We still have very high rates of electricity compared to our neighbors. The good news is practically all the large conglomerates are investing in power plants. The bad news with the environmentalists is that most of these power plants are still coal-powered. And the reason is that it's still the most effective way of bringing down costs. The renewable energy at the moment still leads to high costs. That might change, but looking at the long-term forecast of the Department of Energy, coal would be with us for a long time to come. Corruption and poor governance exists in a big way still. In fact, our president has been very vocal about corruption in the Department of Public Works, Department of Health, and so on and so forth. My only consolation is I see first world countries like South Korea and Malaysia that have attained first world status, even if they have not completely eradicated corruption. So we're not losing hope. We may not be able to completely remove corruption, but we can still become a first world country if we have the right economic policies. As you probably have read, in the last few days, we have been hit by some of the super typhoons that always cross the Philippines. We have had natural calamities, people dying, homes being destroyed by floods. The only response is obviously preparedness. So we hope our government, together with civil society, can be more and more prepared to take care of the victims of these natural calamities. I just wanted to show you why it is possible for us to aspire to rapid changes in our per capita income. Take a look at 1980. China had a per capita income of only $307 US, compared to the Philippines as $782. Of course, Malaysia was on top of all of us. In fact, the Philippines was number 2 only to Malaysia. But because of very erroneous economic policies, neglect of agriculture, inward-looking industrialization, through the years, our neighbors surpassed us. And especially spectacular was the way China was able to grow its per capita income from $307 in 1980 to $10,582. Since we are now trying to retrace the steps of China in terms of market reforms, it is possible that in the next 10 to 20 years, we also can aspire to be like China, growing at not probably at a 12% growth rate that happened after Deng Xiaoping introduced market reforms, but at least at the rate of 8 to 10% in the coming years, once the reforms that I referred to are implemented. Exports of goods, we also are performing very poorly. We have the lowest exports, especially of goods. Thanks to services, we are able to have at least 106 billion, still the lowest, but our exports of goods definitely will not be able to compete with our neighbors. It's too late in the day for us to be a top performer in the export of manufactured goods. We lost the chance in the last century. Now there are many other competitors, not only Vietnam, but Myanmar, Laos, Cambodia, that would have cheaper wages. That is why our focus really should be on educated manpower to be exported abroad or to be used in business process outsourcing and similar high-tech industries. If you ask which sectors will recover faster than others, those so-called V-shape, there are 4 that I identified. Also for your consideration for investment. The whole area of food and agribusiness, and as you know, the biggest concern of the world, starting with China, is food security. And when I talk about agribusiness, I just don't mean farming. I mean the whole value chain. The post-harvest, cold storage, logistics, processing, retailing. That is an area where a lot more investments can be poured into the Philippines. The second is obvious. The pandemic has awakened the consciousness of populations all over the world, including the Philippines, about the importance of investing in more hospitals, more clinics, and investing in both curative and preventive measures of improving health and wellness, not only in terms of medical solutions, but also physical fitness. So all of these types of expenditures will definitely increase after the pandemic. Now, it's clear that the digital industry, what we're doing right now, is part of the digital industry. It doesn't have to recover because during the pandemic, it increased by leaps and bounds. Just think of all the education that's been delivered online. Just think of all the trade that is being done electronically, etc., etc. That is definitely going to be what people refer to as Industrial Revolution 4.0. We will also see the education sector being a sunrise sector and not necessarily the formal educational sector. In fact, we've lost millions of people who were not able to enroll during the pandemic. I'm referring to all means of improving the skills and knowledge of our working population through formal, informal means, webinars, workshops, non-degree programs. That will be a very big business in the future. The ones that will recover very slowly are travel and tourism, except probably for domestic tourism, as long as we're not going to be imposing more and more strict lockdowns. Transport and automotive industry, for obvious reasons. Malls and other retailing outlets which require crowded places. Same thing with dining restaurants, public entertainment, and high-end real estate. The part of real estate that has not suffered is what we call low-cost and economic housing. In peso terms, those units that cost anywhere from 800,000 pesos to about 5 billion. Those still have huge markets among our 10 million overseas workers and our 1.5 million BPO workers. In the third quarter, as I said, there was another drop of minus 11.5% after a drop of 16.9% in the second quarter. There's, as we will see, for the whole year, there are estimates of anywhere from 7 to 11% drop for the whole year, which is one of the highest drops we've encountered since the Second World War. As I said, agriculture was the only one that posted a positive growth rate compared to minus 17.2 in industry and minus 10.6 of services. So these are just the different sectors. And if you take a look at the positive growth rates, it's financial insurance activities that still grew at 6.2%. Then you have public administration and defense at 4.5%. Obviously, it's because it's the government spending. And it's agriculture, forestry, and fishing that grew at 12.2%. And information and communication that grew at 0.8%. So these are the positive growth rates. And you have electricity, water, and other public utilities that grew at 0.2%. So those are the sectors that have been growing even during the pandemic and can be expected to recover ahead of the others. The ones that really plummeted is accommodation and food service activities, dropping at 52.4%. That's hotels and tourism-related activities. So in terms of expenditures, it was only the government that had an increase in its expenditure of 5.8%. All other sectors suffered very big declines. So this is the forecast for 2020. I dare not even forecast for 2021. As I said, we are very much at the mercy of the pandemic. Anything I say about 2021 will be a pure guess. But we can say something a little more definite about what will happen for the rest of the year. So inflation rate will average 2.5. Probably that's the good news. Peso dollar rate, 50 to 51, is more my wish than an actual forecast. As those of you who are watching our currency know, it's still at 48 pesos to a dollar. It's very strong. One of the strongest currencies right now in the ASEAN. In my opinion, our monetary authorities should be managing the currency to a certain extent to make it depreciate to 50 to 51, because it's very unfair that we are giving our overseas workers, with all the sufferings that they endure abroad, only 48 to 1 for the dollars that they send to their relatives. And the same thing with our exporters. As you know, China had been managing its currency to make it depreciate in the past to give the exporters an advantage. So there is such a thing as managing the foreign currency. But obviously, there's a difference of opinion between some of us and the central bank authorities. And they're very confident to keep our peso strong because we have huge gross international reserves. As of today, there's already $104 billion. So as I said, for the whole year of 2020, we may have 7.5 to 9.5 range. It may actually be higher or lower, not lower. I don't think it'll be lower than minus 7.5. It will be higher than 9.5, depending on the number of new waves of the virus that we will encounter in the next 6 months. Industry sector will continue declining. There may be a service sector improvement, especially with insurance and finance and BPO services. That is the end of my briefing. I hope I have enlightened you on why the Philippines, if you take a long-term view, is one of the most promising emerging markets in which to invest. Thank you very much.
Thank you very much, Dr. Villegas, for that insightful discussion. The Philippines has certainly been making strides over the last decade or so, and I think the Philippines itself, within the Philippines itself, we're certainly underestimating ourselves. I can see that this is going to be a really exciting open forum. Before we get to the open forum proper, though, we would like to remind everyone once again to please send your questions via the Q&A option on your Zoom screen. Because if you put it in the chat, there's a chance we won't be able to queue it on time. And we put up the Q&A function on Zoom for your convenience. So yes, right now, let's proceed to our open forum. Dr. Villegas is here to answer your questions. And there sure are a lot of them. Our first question is actually a question that was sent in earlier on our Facebook account. Let me just see if I can see it. We have a question from Julie Chow. Yeah, I think she's from Hong Kong. Hello, CRC. Hubby and I are planning to move our little furniture business out of Hong Kong soon. Personally, I want to move back to the Philippines where I grew up. But we are also considering Australia because we're excited about the political support for the CANSOC economic community. That's Canada, Australia, New Zealand, and UK. There's currently political moves to get that economic community up and running. Do you think if we decide to move to the Philippines, it will still be easy for our business to reach clients in the CANSOC countries? Dr. Villegas?
Very much for that question. In fact, that's exactly why I talked about the RCEP that was just signed by the ASEAN Economic Community together with 5 other very powerful economies, the Regional Comprehensive Economic Partnership, which is definitely not thinking along the lines of America first or Brexit, very anti-trade, very inward-looking. So this RCEP adds to the 10 countries of the ASEAN, precisely Australia, New Zealand, Then you have South Korea and China. And I'm sure that with New Zealand and Australia, you can have from the Philippines a lot more open trade, more freedom to do business. I cannot guarantee with the UK and with Canada because, as you know, they belong to other trading blocs. And as you have seen, in the UK, they're not that enthusiastic about open trade. As countries within the Indo-Pacific region, as I mentioned, are still very much committed to globalization. So definitely, if you move to the Philippines, in addition to that, there are a lot of moves to really give a big push to the furniture industry in this country because it is being put together with a major tree planting program to address the environmental problem. Millions and millions of trees are being planted by different groups, including Rotary International. And a lot of those trees are the fast-growing trees that, like New Zealand, for example, can provide a lot of raw materials to the furniture industry. You should really look very closely at this development in the Philippines. If you're thinking of the furniture industry, I'm sure you're very familiar with how Cebu had become a major furniture manufacturing center. Unfortunately, over the last few years, since the raw materials have been dwindling in this country, but that's going to change because of this great effort of many groups to plant millions and millions of fast-growing trees. And I definitely think that the furniture business in the Philippines will have a bright future.
Certainly very interesting. Next, sir, we actually have by special request, actually, sir, we got a question here from someone we know very well, the governor of Batangas, Governor Hermelando Dodo Mandanas is here. I think he wants to ask a question, and Governor Mandanas, if you're here.
Mandanas, glad to meet you in this Zoom meeting.
I'm not sure if he can hear us at the
Okay, can you hear me now?
there you go, sir.
Governor Mandanas, glad to meet you. I can hear you very well.
Thank you very much for this opportunity to be part of this very important and very timely presentation of how we really are. Being Governor of Batangas and also the chairman of the Regional Development Council of Calabarzon, and it so happens also that I'm the chairman of the Regional Development Councils of the Luzon Island. So we are 8, including Metro Manila. I really believe and I'm very happy that we could be guided by the presentation of Dr. Villegas, which has been very comprehensive and really very profound in analysis. And it has been very, very helpful. So just want to extend my sincerest gratitude that we will be guided accordingly and we will be able to present with better perspective to potential investors to really see the dividend, as was mentioned, that we have here in the Philippines. And well, of course, special bias on well, actually for the development not only of Calabarzon, not only of Luzon, but including Visayas and Mindanao. And I agree that really Iloilo in Visayas and Davao in Mindanao are really the ignition points in those particular parts of the Philippines. And I'm very, well, rather than disappointed, I think we should all in the Philippines be motivated to be more focused and to be more really diligent and exercise really our core capability to catch up, and that this coming century is really going to be an ASEAN century. So thank you very much.
Thank you, Governor. In fact, I saw of the questions that already be very related to what other regions. Read the next question. I can relate it to the state.
Sorry, there was a glitch in the internet. Could you kindly repeat?
No, I was saying that the next question that was sent ahead has a lot to do with what you remarked. And that's why I'm asking to read the next question. I can relate it to
Yes, sir.
Thank you.
Yes, sir. I'm just looking for the next question, which seems to be from Mr. Amado Sabio. How big, yes, how big an economic risk for the Philippines is conflict with China? Either the Philippines' own territorial conflicts or directly in case of trade war between China and the US if it continues under the Biden administration.
Remy, that was not the question.
Okay, sorry.
As an alternative to Hong Kong.
Oh, yes. Yes, I need to look for the video, but the question, sir, comes from Paika Guerra. With lot businesses currently exploring alternatives to Hong Kong, do you think the Clark and Subic special economic and free port zones stand to benefit? How big a game changer are those two free ports for the Philippines?
Okay. Tittling of what Pampanga Triangle. As I mentioned, immediate replacement 60 to 5 years. Calabar zone, especially because structures are already in place. Probably after Batangas, you will have Clark, Subic, and Pampanga. Once that train from Clark to Manila is built by the Japanese. It has been started, but that might take at least 5 years for that connection. But now the connection between Manila and Calabar zone is already very well established. And in fact, the governor of Batangas is going to improve that by building a railway from Calamba all the way to the port of Batangas City, and he's even planning an airport in Batangas. So I think the next really alternative to Manila and as an alternative to Hong Kong will be towards Calabar zone, and then Clark, Subic, and the so-called Pampanga Triangle. And as Governor Bandanas already mentioned, if you're thinking of locating outside of Luzon, then Iloilo is definitely an alternative to those of you who are moving out of Hong Kong. And if you are going to the second biggest island, which is Mindanao, then the city of Davao is the next most promising replacement from Hong Kong. So I would suggest all of those alternatives to people who are thinking of moving away from Hong Kong and is considering the Philippines as one of the alternative sites. Next question, Remy.
We have a question, sir, from Robert Brana of RDB Foods, who asks, Mindanao is the agribusiness capital of the Philippines. Aside from typhoon free, what would you advise to investors from Mindanao in areas like logistics, warehouses, manufacturing, etc.?
Oh, definitely. As I mentioned, the number one sunrise industry now and in the future is agribusiness. And there's no question that Mindanao is an agribusiness paradise in terms of natural resources. And precisely, you are mentioning what are needed to make the potential of Mindanao real, which is to improve the supply chain, logistics, infrastructure. I'm glad to see that the government is spending a lot of its build budget in the island of Mindanao. I mentioned Davao. If you go to Davao now, it's amazing how real estate developers are all now flocking to the city. Prices of real estate in Davao are almost reaching the levels of Manila. And if you see the long-term prospect for building a railway in Mindanao, definitely we will see an improvement in these logistic facilities to make agribusiness a real success story in Mindanao. And I'm referring to high value crops in addition to pineapple and bananas, which are already very successful. We will see cacao, coffee, mangoes, and all types of high value fruits now attracting investors. Hopefully from countries that have succeeded ahead of us like Taiwan, Thailand, Malaysia. Malaysia is already actually replicating its success story in Malaysia in palm oil. There are already palm oil investments in Mindanao.
The next question, sir, is a short one from Corazon Gidote. Uh, don't you think logistics is also a sunshine sector? Perhaps you can comment, sir, on the logistics sector.
Oh, definitely. I'm glad Cora asked that question because remember, agribusiness is not just farming. Agribusiness is the whole value chain from farming to warehousing to cold storage and to the entire area of logistics. All of this delivery of food from the restaurants, takeouts, and so on and so forth, that is now part of agribusiness. And as you can see, that's booming like anything. And logistics is definitely going to be a very important part of the development of agribusiness. In addition, of course, to other goods that are also being transported more and more by all types of vehicles, no? From large vans to bicycles to motorcycles and so on and so forth. And not to mention the building of a lot of warehouses all over the country. Precisely, we are an archipelago that is one of our handicaps, so to speak, in comparison with Thailand, for example. But precisely because we have the challenge, then people who are putting up warehouses all over the archipelago can find opportunities to make money.
Next question, sir, comes from an old friend of the social media. Coming in from Facebook, Mylene Castillejos in London asks, hello, Dr. Villegas. I'm very glad to discover that the Philippines is not falling into the middle income trap the way so many other countries do. But what worries me is that this implies that salaries of workers in the Philippines remain low despite its remarkable economic growth. I'm particularly concerned because Philippine society is already very unequal. Do you think there's a policy the government can pursue so that we can get the best of both worlds somehow? Um, More equitable income matched with continued macroeconomic growth.
You're very right that the biggest problem in the Philippines is the unequal distribution of income and wealth, especially as regards the close to 18 to 20% of the population who are now back below the poverty line. As I mentioned, 2019, we saw the poverty incidence decline to 16.5. Unfortunately, the pandemic will lead that to go back again, probably towards 20%. And so that is our biggest challenge. However, it is not exactly accurate that salaries and wages have been maintained low. In fact, we have one of the highest wage levels in Southeast Asia. Compare our wage levels to Vietnam. That's why Vietnam is still attracting a lot of labor-intensive industries because their wage levels in Vietnam are lower than the Philippines. The same thing with Indonesia. So in terms of manufacturing wages, we have already raised them. And I would also want to cite the outstanding example of the government increasing significantly the salaries of millions of teachers in the public school system. In fact, it has become a problem from private institutions that a lot of teachers are migrating to the public schools because the salaries of public school teachers now range from anywhere from 30 to 40,000 pesos a month. And that definitely is affecting a lot of people from the lower middle income family. I would say that 80% of Filipinos today are either low middle income or high middle income. And I'm also thinking of the 1.4 million workers in the BPO IT sector, many of them coming from the low income households who are earning quite a lot, anywhere from $200 to $400 a month. And that BPO sector now accounts for almost 8% of our GDP. Now, obviously, there are two sides to the issue of overseas workers. 10 million of them, people lament that people are going abroad, but these 10 million people definitely are receiving a lot better salaries than they're locally. And that is why they're now remitting more than $30 billion to the Philippines. In fact, even in the worst month of the pandemic, we could already see that these remittances are increasing, because although about 600,000 of them had to return home because they were laid off, especially in the Middle East, there are still close to 10 million of them abroad. And when these 10 million see their relatives suffering from the pandemic, they became more generous in sending remittances. And that is why I think the drop in remittances in 2020 will be very minimal. And by 2021, when the developed countries will bounce back, you can imagine a tremendous exodus again of Filipino overseas workers, especially in the health, caregiving, and related services. I'm sure you noted that the first vaccine in the UK was administered by a Filipino nurse, and they're all over the world.
Thank you, sir. We're still getting a whole ton of questions. There are more questions now than when we started. But it's almost 4, so I actually have to flash the post-event survey at this point. For those of you who would like certificate of attendance, you'll have to answer the survey, which is flashing on your screen. It's also going to be in the chat if you want to click the link, and that will be the way that we'll get back to you with your certificate of attendance. We'll flash this screen again for you in a few minutes. But if it's okay with Dr. Villegas, perhaps we can take 2 or 3 more questions, sir.
Yes, I can take. Yes.
Yes, sir. The next one actually comes from Mr. Toto Barcelona of Harvest Agribusiness Corporation. Yes, it's very good to hear about the prospects of agriculture and its whole value chain as an investment area. Looking at our weaknesses, what do you suggest that government should prioritize in raising the food security level of the Philippines, which is now, which up to now is still highly dependent on imported food items, both raw and processed?
2 major recommendations. One is to continue the building of farm-to-market roads, irrigation systems, post-harvest facilities, all these infrastructures that we denied our small farmers for too long. I'm gratified to see that a lot of the budget of the Department of Public Works and Highways is being focused in the countryside, not in the urban areas of Manila. I think the philosophy of this government is Manila and Cebu want to improve the infrastructures. Let Ramon Ang, let Ricky Rason, let Manny Pangilinan, and all of these big investors do it through PPP. But the money that will be spent by the government infrastructure is being spent more and more in the areas where agricultural productivity can be improved. So that's the number 1 requirement. We have neglected rural infrastructures for too long, and we have to make up for those neglect. Now, the second is to rearrange the agrarian reform program. As you know, the big failure of agrarian reform was not the distribution of the large farms into small units. It was needed for social justice. The big failure of the agrarian reform program, unlike what happened in Taiwan and Thailand, is that after giving each farmer 1 to 2 hectares each, they literally abandoned them to their resources. And they became even poorer than before because they had land, but nothing more. Before, at least the landlords were giving them the inputs. And so now that we have millions of hectares in the hands of small farmers, we have to find ways of reconsolidating those farms without taking away the ownership through the nucleus estate system of Malaysia, through what is being called now a corporation, teaming up with thousands of small hoarders, especially in the coconut industry, in processing their output and coming out with higher value products like coconut water, coconut milk, and not just staying at the copra and coconut oil level, which are very low value. There are ways now of reconsolidating, but this requires the government to be imaginative in how to allow that reconsolidation of farms, and this is especially needed in the sugar industry. You cannot have productivity in sugar with each one having 5 hectares and trying to farm on his own. You cannot use machines, for example. And so we have to reconsolidate a lot of those farms, especially in Western Visayas, which is one of the most productive areas for sugar. And we can compete with the Thais if we're able to do that. You know, I always point out that when Taiwan, who did a tremendous job of agrarian reform in the last century, when they split up their farms, they exempted sugar because they knew sugar needs economies of scale. You don't need economies of scale in vegetables and fruit farming, even in rice farming, but in sugar, you need large farms to be able to mechanize. And that is something that the government has to find out how to redesign agrarian reform.
Actually, sir, perhaps this is related. At least 4 different people are asking, what do you think the role of cooperatives are in all of this?
Oh, very much. When I talk about reconsolidating the farms, a lot can be done by farm cooperatives. They can actually unite and then work with a large corporation that will deal with the cooperatives rather than individually with each farmer. And that would actually facilitate the consolidation. So I hope to see more and more cooperatives addressing that problem of pre-consolidating those small units so that they can work with the large investors in areas like cacao production, palm oil, coffee, and not to mention the whole coconut industry.
Mr. Francisco Lapid asks po, sir, my business deals with applications development and support for U.S. clients. Will offshoring be affected by nearshore countries like Mexico or even Spain, feeding the needed labor market?
Well, right now, India and the Philippines are still on top of the priorities of companies offshoring their BPO and IT services. Our great advantage is our population is English speaking. And even in India is English speaking, as you probably have seen, even Indian companies are coming to invest here because they see that our population has come some kind of advantage in soft skills, in servicing their customers. And that is why we are able to compete with India. India has a population, many times our population, but we are able to compete with India in this BPO IT. I don't think Mexico and the other countries pose a serious threat to our BPO IT. What we have to do in BPO, however, is to foresee that voice-oriented BPO enterprises will be threatened by artificial intelligence and robotization. It's very easy to replace voice-oriented BPO. So we have to retrain a lot of these workers so that they can migrate to high-value knowledge process outsourcing services. you know, we are very much in the forefront of animation. Filipinos are very creative. So those areas should be given emphasis rather than call centers. Call centers will not disappear, but they will be less important in the future. So we have to move towards the more knowledge-based types of services.
My friends in the animation sector are certainly going to be very happy to hear that, sir. Uh, there's a technical question here asking if the video will be available for people to see later. Yes, it will be up, sir, on social media. So we've got 2 or 3 questions asking that particular item. A bunch of questions just came in from India. Actually, we have more questions now than we had before. But I'm going to focus on one, which is how do the Philippine private sector play the role on the climate change and ESG or sustainability space as promoted by Pope Francis and now just supported by major businesses under the Council of Capitalism? Do you see these issues are more and more becoming part of mainstream strategy for Philippine firms?
Oh, definitely. In fact, CRC is very much involved in helping a lot of big corporations prepare their sustainability report. And definitely that addresses the issue of climate change. As I told the person who asked a question about furniture, the mining industry, together with many NGOs, are precisely reforesting a lot of our denuded areas. And that is a very important problem. You probably have read about how so many areas in the north of Luzon and other places were flooded in the last typhoons. And the main reason was the denudation of the forest. But there is a great consciousness on the part of the private sector to play a role in planting those millions of trees. I mentioned Rotary International as one of the leading NGOs. Yes, there is great consciousness, and some large corporations are taking very seriously getting into alternative sources of energy. The Ayala Group is very much involved in solar energy, and that also addresses the question of how to reduce the percentage of coal-powered plants in the total energy mix. So there is a move. It takes time because at the moment, as I mentioned, we still have very high electricity rates, and the immediate solution is to use at least clean coal. But over the medium term, there definitely will be hopefully a reduction in these fossil-based sources of energy.
Yes, I'm really very sorry to everyone who still has questions, but I'm going to have to make this the last one. From Aris Quintanar. Hi, Dr. Villegas. My company is currently involved in the agribusiness sector as a corporate grower for multinationals. We are interested in increasing the areas and crops we plant. However, we are worried about how CARP, or the Comprehensive Agrarian Reform Law, will affect our long-term plans. What is being done in terms of legislation to encourage people to invest in agriculture again? So the question is in legislation, sir.
Yes, I already mentioned that there is still this challenge. Unfortunately, agrarian reform has not been given a high priority by the Duterte government. We have probably one of the best Secretary for Agriculture we've had, and he's doing a lot to put the necessary foundation for long-term growth in agricultural productivity. However, the area of agrarian reform is not yet being addressed with the political will that we would like to see. However, you do see already some valiant investors like Kenimer is taking over thousands of hectares in Palawan to plant cocoa or cacao, as we call it here. So there are examples of multinationals that, despite the challenge of agrarian reform still in animated suspension, I would call it, that they already are able to consolidate large tracts of land. Now, I just hope that in the next administration, they will appoint a Secretary of Agrarian Reform as qualified and as action-oriented as our Secretary of Agriculture so that we can address. I agree that that is still a problem. There's so many questions that we still have to answer about what to do with the fragmentation of land that resulted from the so-called CARP, the Comprehensive Agrarian Reform Program. And we are trying to work together with some people in Congress to be able to come out with the necessary legislation. So count on some of the more enlightened people in Congress to do something about this in the next 2 to 3 years.
Thank you very much, Dr. Villegas. I really do have to apologize to all of those questions that are still there. There are so many, but
send the questions, and then you can send them to me, and I can answer them in writing.
Yes, sir. We will send the questions over to you, Dr. Villegas, and I believe we have everyone's registration email, so we will be responding to it there. Before we finally say goodbye, we'd like to flash again the link for the post-event survey. We'd like to ask you to answer it, please, because that's how we'll know how to send you your certificate of attendance. Do answer it before Monday, December 14 at 5 p.m. if you want to get your certificate. It's certainly been a very interesting session. I feel smarter just by listening to all of that, sir. Thank you very much, Dr. Villegas, for everything you've shared today.
Thank you.
And thank you so much, sir. And thank you to everyone who has been involved in the session. Thank you to all of our listeners from all over the globe. I see participants here from Hong Kong, from India, certainly. I think I saw someone from the US and I think New Zealand at some point. Thank you all so very much. We'd also like to thank the rest of the team from CRC and from the Department of Information Science and Technology. And we'd also like to acknowledge the help from the Office of Alumni Affairs at the University of Asia and the Pacific. That closes out our time together today. Thank you for joining us, and we hope you can join us for our next event. Stay safe, everyone. Have a good day, and let's keep working towards a better tomorrow.